And welcome back. It's Jason Walter here. Hope you guys are having an awesome day, by the way. And thank you so much for joining me in today's video here. I'm actually really excited to share this video with you guys because I noticed that Realtor.com released their summary for November, what happened with their housing market for November. It's actually a really good summary regarding what happened for the month, but also they provided a detailed analysis about how each of the major regions in the US, there's 4 major regions in the US, they talked about how each of these 4 major regions compare to each other, and there's some very big differences. They also talk about how each of the major markets in the US compare as well, and there's some very big differences there as well. So I'm actually really excited to share today's video with you guys, and if you guys get any value of this video whatsoever, then please hit the like button. So let's go ahead and dive right in. So November, of course, the housing market continued to cool. We had rising inventory levels, fewer pending home sales, a slower pace of home sales or closed home sales, and slowing price growth. Another way to say slowing price growth is that home prices declined on a month-over-month basis here. So our housing market is cooling off. We're seeing more houses for sale, fewer contracts being signed between buyers and sellers, and of course, fewer closed home sales as well. So have a look at this. This is really interesting here. It says inventory of houses for sale, which of course is housing supply, has surpassed 2020's levels, but continues to fall short of pre-pandemic levels back in 2019. So that's overall for the nation here. But look at this. In the West, inventory may reach 2019's levels as soon as next month, as soon as December. So we may have more houses listed for sale in the West as a region compared to 2021 through 2019. But on a national level, inventory of houses for sale right now increased by 46.8% compared to the same time period last year. This is for November compared to November 2021. Inventory is up by 46.8% on a year-over-year basis. That equates to 240,000 more houses for sale as of November compared to last year. And by the way, this year-over-year change in active listing inventory has been increasing as well because in November, it increased by 46.8%, but back in October, it increased by 33.5% on a year-over-year basis. So in one single month, we went from a 33.5% increase on a year-over-year basis for housing inventory. Now it's at about 47%. Now, having said that, inventory levels are still about 38.1% below pre-pandemic levels back in 2017 to 2019. One thing I do want to add regarding this, though, is that even though we have fewer active listings compared to 2017 through 2019, our housing market is still slowing down greatly. Here's a chart showing housing inventory over the past several years. I actually really love this chart because most of the charts I share with you guys only go back to 2019. So Realtor.com provides insights regarding 2017 through 2022. So there's a lot of lines right here. So let me kind of briefly explain this. So right here, which is more or less kind of what a yellow line is 2022. This aqua line right here is 2020, and here's 2021 in dark green. Obviously 2017's right here in blue. Orange is 2018, and here's 2019 as well. So as you guys can see, we have more houses listed for sale right now compared to 2020, and of course compared to 2021, up by 47%, but still well below what we saw back in 2017 through 2019. Because look at this, 2017 through 2019, there was approximately 1.1 to just under 1.3 million houses for sale. Now we only have 751,000. But again, despite the fact we have far fewer houses for sale compared to pre-COVID levels, our housing market's still slowing down big time. Let's also talk about pending home sales, which of course is the total number of houses that are in contract with a home buyer. So an offer was accepted here. So pending home sales declined by 35.6% compared to last November. This is also a further deceleration from the 30% annual decline that we saw last October. So in October, pending home sales were down by 30% compared to October 2021, and now they're down by 35.6%. And on top of that, the count of pending home sales right now has declined below pre-pandemic levels in 2019 for the first time. And of course, this decrease of home buying demand, of course, is spurred by rising mortgage rates. So here's a chart showing pending home sales, which is right here. I'm slow. Anyways, here's pending home sales down by 35.6% on a year-over-year basis in November, down by 35.6% compared to November 2021. As you can see right here, November 2021 was right up here, well below last year's levels, and also well below 2020, which is way up here at the top here. So levels we have right now of pendings are below, of course, 2020, of course, 2021, but also below 2019's levels as well. And again, this is the first time we've hit below 2019's levels in quite some time. What also really caught my attention regarding these charts right here, looking at 2017 through this year, is this right here, because it just really shows how, 2022, 2020, as well as 2021 was all over the place with the housing market. I mean, look at this. 2021, a giant increase of contracts being signed. Then it kind of sloughed off a little bit towards the last half of the year. In 2022, this year, it increased big time through the spring months this year, but now it's falling down big time. Now it's below 2019's levels, whereas on January 1st of this year, we were well above 2019's levels. Also, look at this, because in 2017 through 2019, there really wasn't a whole lot of fluctuations here, because it kind of followed a similar trend where we had a low amount of contracts being signed in the winter months in January and February. It gradually increased until we hit the summer months. Then it kind of fell off a little bit, but more or less in unison through 2017 through 2019, whereas the past few years, it's just been all over the place. It just kind of shows how volatile our housing market has been and how crazy it was back in 2020 and of course 2021 as well. Let's also talk about new listings as well, because new listings nationwide for November were down by 17.2% compared to the same time period last year, which of course was November 2021. It says here a greater rate of decline compared to last month's 15.9% year-over-year decrease. So in October, we had a decrease by 15.9%, but this month down by 17.2% in the number of new listings in the US. They also talk about Fannie Mae's Home Purchase Sentiment Index, which of course is a monthly survey that Fannie Mae conducts here. They talk about seller sentiment here, which is on point because we're seeing a decrease of new listings due to a due to a slowing of our housing market, and also due to, of course, a lot of people don't want to give up their historically low rates. And that survey is right here. This is Fannie Mae's Home Purchase Sentiment Index for October. It actually declined for the 8th consecutive month in October, falling to its lowest reading since the inception of this index back in 2011. It says high home prices and unfavorable mortgage rates continue to fuel consumers' housing affordability concerns. Only 16% of the respondents to the survey here indicated that now is a good time to buy a home, a new survey low. While the percentage who believe now is a good time to sell a house also decreased sharply from 59% to 51% in October. Therefore, consumers are increasingly pessimistic regarding home buying as well as home selling conditions. And therefore, because of all this, we're being seeing this decrease of new listings for the past several months now. So here's an actual chart showing new listings in the US over the past several years. So look at this, down by 17.2% on a year-over-year basis. It has been falling big time ever since more or less July this year. Whereas in 2017 through 2021, it was more or less moving in unison here, more or less a uniform for those years here. Peaking in the spring and summer months and then falling off big time in the winter months. We are seeing that peak that we saw this year and also falling off big time as well. But the decrease right now is far greater than we've been seeing over the past several years. One thing I do want to mention regarding this is that it really surprises me to see this decrease of new listings down by 17.2% on a year-over-year basis. And despite the fact we've been seeing far fewer new listings compared to past few years, active listing inventory is still up by 46.8%. So this increase of new listings, or actually this increase of active listings, is really due to a pullback in home buying demand and not due to an increase of new listings, because new listings have been declining by double digits for the past several months. Now here's something very interesting as well, because Realtor.com says here the inventory of houses actively for sale, in other words, housing supply, in the 50 largest US metros overall increased by 62.8% over last year in November, outpacing the national growth rate. So out of all the 50 largest metros in the US, inventory increased by almost 63% on a year-over-year basis. Compare that to a national level. On a national level, inventory increased by 46.8% on a year-over-year basis. And also have a look at this, because in the West, active listings grew the most by 93.7% on a year-over-year basis. That was followed closely by the South, an increase of 89.3%. In stark contrast, though, look at this. The Midwest and the Northeast only grew by 22.9% and 9.1% respectively. And like I mentioned, active listings in the West are approaching pre-pandemic levels back in 2019. They're only 7.3% below 2019's levels for active listings in the West. Whereas other regions are well below this benchmark here, because active listings in the Midwest are down by 40.9% compared to 2019, down by 38.7% in the Northeast, and down by 27.8% in the South compared to 2019's levels for active listings. Inventory also increased in 47 out of the 50 largest metros compared to last year. Metros that saw the largest inventory growth were Raleigh. Look at that. Raleigh, North Carolina, inventory increased by 188.2% on a year-over-year basis. That's absolutely insane. That was followed by Nashville, a giant increase of 182.8%, and Phoenix, Arizona increased by 176%. In contrast, though, inventory is declining on a year-over-year basis in only 3 markets. That was Hartford, down by 15.6%, New York down by 1%, and Chicago only down by 0.2%. So it's pretty wild to see that inventory increase in 47 of the 50 largest metros. There's only 3 metros where inventory actually increased on a year-over-year basis. Let's also talk about how fast or how slow houses are selling as of November, according to Realtor.com. It says days in the market is at 56 days as of November, and this is 8 days longer compared to 1 year ago. So what this means is that it's taking approximately 8 days longer to sell a house right now compared to 1 year ago. And because it's taking approximately 8 days longer to sell a house compared to November 2021, this is one of the primary drivers why inventory has been increasing. They do say here, though, that I can compare this to 2017 to 2019. Houses on average are selling about 18 days faster compared to that same time period. In other words, even though it's taking approximately 8 days longer to sell a house compared to 1 year ago, at 56 days, that's still approximately 18 days fewer than the typical time frame back in 2017 to 2019. They also provide some insights regarding home prices in the US right now. It says the national listing price, in other words, these are asking prices people listing their houses for. So the national listing price declined to $416,000 this November, down from the all-time record high that we saw in June at $449,000. They said that's down by 7.9%. When looking at home prices from June, $449,000 down to $416,000, down by 7.9%. Actually recalculated this though, it's actually down by 7.3%, but close. In any case, the 7.9% number should be 7.3%, a decrease from $449,000 down to $416,000. Anyways, they're close though, right? Look at this though, this is really interesting. So it says home prices have typically declined by about 2% from the summer's peak by November. So in general, when we look at home prices from the peak in the summer months to November, home prices on average decreased by 2%. So it's pretty wild to see that home prices have declined by 7.3%, not 7.9%, down by 7.3% this year, whereas the national averages is down by 2% during that same time frame. So it just goes to show how our housing market is slowing down big time, because the 7.2% decrease, of course, is much greater than this 2% typical decrease we typically see. And you can see this when looking at this chart right here, going back to 2017, because we saw this huge run up in asking prices until we hit June. Then June hit, and then prices declined big time. When looking at 2017, 2018, 2019 though, look at this, kind of slow, gradual increase until we hit May and June, kind of plateaued out until July, and then it slowly decreased for the last half of the year. Whereas this year, a big increase followed by a big decrease. They also provide some insights regarding the share of reduced price listings right now in the US. And by the way, these numbers vary greatly compared to altosresearch.com for whatever reason. It says here the share of houses having their prices reduced grew from 9.2% last November. So the share of reduced price listings last November of 2021 was 9.2%. But this year it grew to 19.6%. So the share of reduced price listings as of November is 19.6%, according to Realtor.com. It's still well above pre-pandemic levels, but has peaked though, because back in October, the share of reduced price listings was at 20.9%. I should mention, I don't know why this number is so much lower than Altos. Altos is reporting that the share of reduced price listings is around 43% nationwide, whereas Realtor.com is stating that number is 19.6%. In any case, let's move on here. I want to talk about how each of the 4 major regions compares because there's some very big differences here. And they're going to be comparing how each of the 50 largest metros compares as well. And I'm going to be sharing how each of the cities here have some very big differences here. So very, very briefly here, I want to state this because look at this. The West active listings, which of course is housing inventory, is up by 93.7% on a year-over-year basis. The South increasing by 89.3%, whereas the Northeast only increasing by 9.1%, and the Midwest increasing by 23%. So some very big differences compared to each of these 4 major regions here. Also look at this. The West, new listings down by 25.8%, far below all these other regions here as well. And asking prices only increased by 3.8%, whereas the South increased by 9%, the Northeast up by 9.4%, and the Midwest up by 13.1%. And lastly here, I want to share this right here because look at this. It's taking about 11 days longer to sell a house in the West compared to 1 year ago. And this is much slower compared to these other regions here because look at this. The Midwest, it's only taking about 2 days longer to sell a house compared to 1 year ago. All right, let's talk about each of the 50 largest metros. And it's really interesting to see this because a lot of these cities here have negative price growth. There's actually 7 markets here where home prices are lower right now compared to 1 year ago based on the median listing price. So those markets are actually in Austin, Texas, down by 3.4% on a year-over-year basis. That's followed by Birmingham, Alabama, down by 1.1%. Then we have Denver down by 2% compared to 1 year ago. And also Las Vegas down by 0.2%, followed by New Orleans down by 5.4% on a year-over-year basis. Then we have Phoenix, Arizona, Scottsdale, Arizona, down by 1.1%. And then in Sacramento, California, down by 0.4%. Other thing I want to mention as well is that there's a lot of markets here that are very, very close to being into negative territory as well. Because look at this, Atlanta, Georgia only increased by 1.8% on a year-over-year basis here. Charlotte, North Carolina, up by 1.5%. Chicago, up by 2.8%. Houston, Texas, up by 0.8%. Los Angeles only increased by 2.6% on a year-over-year basis. Pittsburgh up by only 0.1%, which is pretty crazy here. In stark contrast though, have a look at this. Home prices up by 21.2% in Kansas City, Missouri here. Memphis, Tennessee up by 26.9%. Miami, Florida up by 24.8%. Milwaukee, Wisconsin up by 38.1%. I'm really interested in why that number is so high, up by 38.1%. Maybe there's a higher share of more expensive houses that sold in November this year compared to November 2021, up by 38.1%. And lastly, Virginia Beach up by 19.8% on a year-over-year basis. And with that said, please comment below your biggest takeaways from today's video. Also, if you guys got any value in this video whatsoever, then please hit the like button. I greatly appreciate that. Hope you guys have an awesome day and look forward to seeing you on the next video.